Good afternoon, ladies and gentlemen, and welcome to the Interseed Group plc interim results investor presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged. They can be submitted at any time via the Q&A tab that's just situated on the right-hand corner of your screen. Please just simply type in your questions and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company will review all of the questions submitted today and publish responses where it is appropriate to do so. Before we begin, I would like to submit the following poll, and as usual, if you could give that your kind attention, I'm sure the company would be most grateful. I'd now like to hand you over to CEO Klaas van der Leest. Good afternoon, sir.
Good afternoon, Jake, and good afternoon, everyone. My name is Klaas van der Leest. I'm the CEO for Interseed. I would like to welcome both existing investors as well as potentially new investors to this session, where we cover our interims for the period 1st of April until the 30th of September. During this session, I'm joined by Nitul Patel, who's our CFO, and Alan Story, who's our Chief Product Officer. We look forward to providing you with an update in the coming 45 minutes, whilst this presentation is us presenting to you. We look forward to your questions, but also your feedback after the session. So without further ado, let's start with the presentation. So whilst you see two parts being presented here, the first part being the interims, the second part being the acquisition, part two was already covered and has been stored on IMC platform following our presentation of the 18th of October. That's available to you to review. We are not going to cover part two again, but we happily take any questions you may still have following the acquisition announcement of Orthologics. So during this session, we will focus on part one, our interims for the period to the 30th of September. We'll start with a quick introduction, where we fit in the market. Ultimately, we fit within the wider identity and access management market, the IAM market. And whilst it is a very broad market, we focus on the authentication segment. Specifically, we have a very specific view on strong authentication and authentication. We use the pyramid. Those who've listened to us before will recognize the pyramid, which we use in order to indicate the balance between weak authentication at the bottom, moving all the way up to strong authentication. Interseed as a company for the last 20 years has focused on the real top end of that pyramid, the PKI element, and we've built up a phenomenal client base on the back of that. So we believe we're one of the market leaders in the PKI space. Our client base is second to none. It's very recognizable, with clients spread globally, but with a very heavy focus on the North American federal market and the defense and aerospace market. However, in the last 2 years, we very much realized that PKI in itself is a niche. It's not available to everybody. It's complicated, technically complex. It's also expensive to maintain. So realistically, it's only really available for those who've got the right skills and resources in-house, and also the financial resources to support this. So in the last 2 years, we very much tried to focus on how can we come down the pyramid. We added about 18 months capabilities around FIDO. FIDO is originally a consumer standard, but has very much found its way into the corporate enterprise space. And we now offer out-of-the-box standard support for both PKI credentials as well as FIDO credentials. It's been interesting that in the last 6 months, we've seen uptick in the market here in Europe, but also in Asia. And Alan was in the US last week with our client advisory board and got very good feedback on the capabilities we're offering, again, for the federal space and defense and aerospace pockets. The pyramid then also very much has been a leading contributor to our M&A play. We were very keen to start dominating that middle section of the pyramid simply because of target account market, i.e. available market size, hence the acquisition of Orthologics, which covers both the middle section, the MFA market, as well as the password sector. Passwords are here very much to stay. We strongly believe that passwords will be used for many years to come, and probably within our lifetimes, many of us will still continue to use passwords because there will be many applications that still will rely on passwords going forward. So if you have to use passwords, at least make sure you use a strong password, and more importantly, use a password that's not knowingly been hacked or exposed already on the dark web. So if we then move on to progress report, we had a good start in half one. Our revenue growth was very sensible, early 20% growth, both in terms of reported as well as constant currency. We had some good deal flow in the period, which resulted in strong cash flow generation, and that in itself resulted in good cash for the period. We continue to focus very strongly on margins and cost control, and profits for the period were slightly higher than we had forecast and indeed budgeted for. The momentum we've seen in half one is very much being dragged into the second half as well, and post-period close, we've signed a few more deals that really help us to propel into the second half and then indeed into the period towards the end of March. Post-period, we announced the acquisition of Logix. Again, for any of you who haven't listened to the original recording of the 18th of October, I encourage you to do so. And if you have questions as part of this presentation, then please use the facility to ask the questions as we head towards the end of the presentation. Clearly, what Logix will allow us to do is offering a broader product portfolio, both in our existing client base, but also in net new clients. They're very strong in the Middle East. We're very strong in North America, so we can upsell and cross-sell in both regions. And the markets for MFA and PSM, Password Security Manager, is significantly bigger than the markets we have traditionally focused on. If we then move on to the right-hand side of the slide, revenues for the period were 6.1, playing 4.9 before, so good, sensible increase. We had a number of license orders in the period, most notably from the Department of State. It's a total value of $1.6 million. Again, just to be absolutely clear, the majority of what we sell is perpetual license. So perpetual license is recognized within the period. Support and maintenance is then recognized on a month-by-month basis. So not all this revenue was recognized in half one. We also had some services orders from the same agency, both professional services and some development in order to fit within their wider solution set. So we've reported in the last couple of years, our support and maintenance renewals remain very, very strong, 98% renewal rate. And basically, once our customers are on platform, the business tends to become quite sticky. And we're very pleased that a large part of our cost base is now supported by the revenue associated from our support and maintenance renewals. On the back of the deals we've signed, receivables increased accordingly. Nitil, CFO, will provide a bit more color on that in the next couple of slides. And on the back of that, our deferred revenue grew as well. Some of that revenue we'll recognize in half two. The remainder of that will follow into next fiscal year. So we said before, cash is important. Cash was 10 million at the end of the reporting period and dropped slightly following the acquisition announced on the 10th of October. But also since the 10th of October, we've continued to generate good cash. And again, Nitil will pick that up in the next couple of slides. So Nitil, I'll hand over to you for the financial review.
Thanks, Klaas. So obviously, the income statement will show, let me just move that slide. So as Klaas has mentioned, we did have some delays in FY22, and we're seeing that impact come through in H1 FY23, and we've continued with that momentum into H2. Revenue was up by 23% in constant currency mode and obviously 24% reported. And the good news for us is that a license deal is very accretive and does feed at the bottom line. Now, just a note for this transaction on the license sale, there was a third-party element to that functionality that they bought, and that's why you'll see the gross profit has been slightly lower because we've accounted for that third-party sale. It just depends on that on the client and whether they want to use that functionality or not. And look, going forward in H2, we're not forecasting any of our clients using that for functionality. As we've mentioned previously, our biggest expense is payroll, and we look to control that as best we can with the view of retention and obviously the tight UK and US labour markets, especially in developers. What we've done is that we have expense, as you know, our development expense into the income statement. It was 1.5 million in H1, and it's forecasted to be 1.6 million in H2. During the year, we obviously had pay rises. In April, we allocated 4.8% to our staff, and then obviously that has the activity in the period has increased our commission bonuses as well. In September, the board decided that in light of the current situation in the energy market and the cost of rising through that place in electricity and gas, that the company will make a one-off payment, a COLA payment, cost of living allowance payment, to all employees in the UK and the US, £1,000 gross in the United Kingdom and $1,100 gross in the United States. We've accounted for that in these numbers as well, and although they didn't get paid in September, they're going to be paid in November. One thing about the UK R&D tax legislation is that we can claim tax benefits or credits for that expenditure in the United Kingdom, and the good news is that all our developers are in the UK. So you can see there's a £600,000 tax credit in the numbers, and that's because we've applied for it and we received the money last week. Just as a point of note, and there was a question about this, that what has the autumn statement had an impact on this, and there will be an impact going forward as the percentage allowable is reduced from 130% to 86%, and therefore the effective rate that we'll be able to claim against has reduced from circa 33% to 21%. But we'll still continue to make those claims because we can, and we are spending and innovating in the United Kingdom. As a consequence of the revenue streams coming through and control of margins, we've seen our profits increase, and we'll continue to focus on this going forward. I just wanted to give a flavour of our revenue as a regional revenue stream analysis, and also from where the revenues come from. As you can imagine, the largest market for us is the United States of America, Americas. But we have had some few wins in the rest of the world and in UK. Class will explain to that, but that was after H1. The OrthoLogics acquisition also gives us a footprint in the Middle East. We don't have a big footprint in the Middle East. We've only got 2 deployments, so this helps us to expand the rest of the world offering as well. As mentioned before by Class, support and maintenance is a key KPI for us. And the reason we like this is because it's the annual recurring nature of it, but it also gives us the ability to attach inflationary increases to these S&M. And because our clients are normally large defense contractors or US federal or UK or governments in the United Kingdom or Europe, we can then apply these inflationary increases to cover at least some or more, potentially, hopefully, most of our increases that we're incurring on our staff costs. We won't cover most of it at the moment, but we're looking to cover as best we can going forward. The other part that we're focusing on as well is professional services. And this is just to give us engagement with our staff, with our clients all the time, because now we've got a cadence of bringing every quarter a new version of our product. It means that we're engaging with our clients, making sure that we can help them upgrade, and we use our PS to get them to upgrade into a better platform, more functionality, making the product more embedded into their workflows. One thing that we obviously everyone's noted is the volatility in the exchange movements between the dollar and sterling. And as you can imagine, most of our invoicing is in dollars. We don't enter into forward exchange contracts at the moment purely because we don't have the certainty of the license income. But because our S&M is growing, and we know now that during the period of February, March, and April, there'll be large amounts being renewed, we will look at that point and then enter into a 3-month forward exchange contracts with our bank, just to give us certainty to know what we are converting at, and then reducing the volatility that we've experienced in H1. We have experienced some decent positive headwinds in the movement of the exchange rate, but that's unwinding now in H2, and that's been forecasted to do so. Financial position. Interseed has a very clean and simple balance sheet, and we like to keep it that way as best we can. The non-current assets are just mainly to do with IFRS 16 leases, And the three areas we focus on are trade and other receivables, cash, and deferred income. These metrics are really important for us because it gives us the strength to continue investing in our product, and also then give us the capability of potentially using the balance sheet to then do an M&A further do an M&A acquisitions on top of the Orthologics one. And Klaus will explain further on why this is good. This is really important for us. Of the trade and other receivables, the DSO has dropped from 68 to 47. And again, good indication of what we're planning, what we've been doing. We've been invoicing early and we've been collecting our cash early. Of that 3.6 million, we've received 3.1 million. So our cash balance, even though reduced after the acquisition, has gone back up after paying all the trade and payables, which we're also very keen to make sure that our suppliers get paid, because they're also having the same issues as we are on economic environment. So we want to make sure that they can maintain their services into us. The loyal customer base I've mentioned before allows us to pass inflationary increases as and when we can. One of the things that will happen going forward is that because of the acquisition in October for Orthologics, the IFRS 3 standard means that we'll have to account for it as a business combination, which you'll see 3 new lines coming in: goodwill, identifiable intangibles, and deferred consideration. And we'll just make the balance sheet slightly more complicated, and you'll see some new lines coming into the income statement reflecting amortization, M&A costs, and so forth. One of the things that we also did, just to highlight, is that we accrued the £250,000 M&A costs into the income statement for H1, because we knew that although the deal was a week late compared to the 30th of September, most of the costs were incurred during that period of August and September during DD. A key metric of our 6 C's is cash, and why we find cash is really important for us, especially through the restructuring that Klaus and the team did previously. So we want to focus on cash so that we know we can constantly invest in our product, but also it gives us security, especially considering the volatile economic environment that people are entering at the moment and experiencing. If you look at the bars, the 4 bars are indicating cash generation, cash on the balance sheet, debt in the company, and net cash position. And if you see, it's all been growing rather nicely, and the black bars show you the cash balance of the company. So as we mentioned, a key metric for this of the 6 C's, we have a robust working capital document. We adapted every forward-looking document that's adapted every month for 12-18 months, and we build the models in to make sure that we understand how the integration works and any potential acquisition, what bandwidth we have to make sure that we execute on that. And that's so far on the financial. I'm just going to pass you back over to Klaus.
So in this section, we're going to give a quick summary on product and market, which Alan will lead, and Ed will also provide and tee quite nicely up for how we're approaching M&A and what we're looking for going forward. So Alan, over to you.
Thank you, Klaus. So people buy our product, MyID, to protect themselves against data breach. They do that because of the increasing levels of fines, the threat to business continuity, or on occasion to have to comply with specific regulation. One of those key regulations that's driven our business is in the US, called FIPS 201, also subtitled PIV, Personal Identity Verification. And that realizes that the most common form of a data breach is a weak credential, so insists people move towards stronger authentication, move towards the top of that pyramid. PIV is not just about the credential, it's also about the identity. So there's no point me having a strong credential that says I'm Bill Gates if I'm not Bill Gates. So there's identity in here as well. So these are the elements that MyID provides. It allows you to register and identify people, make sure they are who they claim to be, to actually issue and manage their credentials, and to do that at scale. So our product scales up to tens of thousands, hundreds of thousands, millions of identities for some of our larger programs, and also manage the life cycle of them. People forget them, they lose them. How can you do that and not have a huge operational impact on the business? And depending on the type of credential you're using, well, you may need to be involved at the point of authentication, the point of usage of that credential. So if I put a key and certificate down to a smart card, I can log onto Windows, I can sign an email. We don't need to be involved in there. Support for that is built into Windows. If I'm using FIDO, one of the newer authentication standards that came from the consumer space, but is now starting to be looked at in the enterprise space, then you need an authentication server. you need a product there that will validate that token at the point of use to make sure it's valid. And that's what MyD can do. So we are a fully certified FIDO2 server. So I'll explain how we do that on the next slide. So the three rectangles in the middle here really represent key features that MyID provides. On the left-hand side, we have the identity. So sometimes we're just integrating into a directory in an organization of user data. Sometimes we're having data passed into us from a human resources system or a system such as SailPoint. For the higher assurance programs, we can capture information about the person and prove they are who they claim to be. So that can be fingerprints, it can be facial biometrics, sort of passport style quality photographs. It can be proof of ID, and that's to the level of taking a passport or driving license, putting it on specialist hardware and making sure that that's not been faked or tampered with. So it's a genuine passport. Then we can take that data and push it through background checking systems. So that can be one-to-many fingerprint systems. Has this person previously tried to enroll as somebody else? And once we've got to the point of knowing somebody called Sam's enrolling, this really is Sam, the address, the driving license, the passport, all of that still matches. Is Sam a good guy? Is Sam on a terrorist no-fly list? Do we actually want to let them into the air traffic control towers or track the nuclear material that some of our customers do this for? And Nitil mentioned the fact that some of our cost of sales has gone to a third party. 95% of the product we write ourselves. There are very small occasions when we do integrate third-party SDKs, and they're very specialist into our product. We have a reseller agreement for those, and that's in this area, that's in biometrics. So it's a very specialist area. Didn't make sense for us to buy that or build it ourselves. So we now know we have a person who is who they claim to be, and we've done all the background checks against them. We can now issue them, manage them a credential. So here we integrate again with a number of third-party systems. So the big theme of MyID is integrating lots of solutions together and putting policy over those. So the PKI vendors, the people who provide the certificates here, people like Microsoft, PrimeKey, Intrust, DigiCert, Verizon, etc. Mobile device management vendors. So lots of our customers now are starting to use stronger identities on mobile as well as their desktops. So we have customers deploying this live. We have integration where Microsoft have taken our SDK and embedded it into their Intune product, and VMware AirWatch have taken it and deployed it into their Workspace ONE product. So those are our SDKs embedded into those platforms. And down the bottom here, we have people using MyID, so people issuing cards to people, providing help desk services, and a huge amount of self-service in the product. So at a kiosk, we provide the software, not the hardware, but we can run on any kiosk at their desktop, on their phone, either in our app or embedded into a partner's app. We can provide all that lifecycle issuance and management. On the right-hand side, this is where we get involved in the authentication. So for example, if we're using a FIDO credential, we can issue and manage that FIDO credential to the individual. We're very much focused on FIDO for the enterprise. So we're not trying to be a Me Too player in the consumer space, focused on that enterprise management and deployment. So we bring the capability to issue the FIDO credentials to a policy. We know who's got them, it's the right piece of hardware, it's the right crypto, we bind it to the person, we give that visibility and traceability. We make sure when the person's left the organization, all of those credentials are revoked. So in this example, we've issued a FIDO token. That person wants to access an application. Most of the time in larger organizations, those applications will be protected by an identity and access management system. So something like ForgeRock, Ping Identity, Okta. Now, most of those systems will cope with a lower level of assurance. I can authenticate to them with a password or perhaps a one-time code sent to my phone. But if you want to use the higher levels of insurance, the hardware-backed phishing-resistant credentials that lots of our customers do, then those systems can call into us. So person logs onto an application, that application is protected by Okta. Okta calls into MyID for the higher level of assurance using standards protocols, OpenID Connect. This is very easy to integrate, very easy, very standards based. MyID will then authenticate that person with their FIDO credential. So we know it's the right person, it's bound to their identity, it's the right device, it's high assurance, it's two-factor authentication. We can then pass that back to that identity and access management system so that person can then be authenticated into the application. It's faster to do than it takes to explain. So it's a very seamless experience. But that really indicates our strategy in that area. We're not trying to fight the giants in this space. We're looking at how do we add value and work well with them. And there are some key drivers in this space which really drove us onto why did we do the acquisition we did. So FIPS 201 is one of the few digital identity standards out there describing the technology and the business process. And we've seen customers as far afield as Germany and Singapore look to follow these standards. So it's not just related to the US. The original standard said PKI is the only technology you can use. So that limited its deployment. But the three factors on the right here are changing that. So the first one was an executive order that came out of the executive order of President Biden's office. So the executive was the president. So this said you must use multi-factor authentication, strong authentication, to the maximum extent possible. So that drives it out to everybody in the organization, and it drives it down the supply chain. More detail behind that came out from the Office of Management and Budget. So they published a memorandum, which is again tied to the executive office of the president, and that was on zero trust. So that states it's no longer enough for somebody just to log onto the network securely. We need to move that to the application level. So just because Sam logged on 20 minutes ago, now he's accessing a finance application, do we still trust him? Is Sam allowed to access a finance system? Is it 3 a.m. in the morning, which would be unusual behavior? Is he now trying to log on from an IP address in China and he's tried 100 logons within the last 5 seconds? Something suspicious is happening. So this is really changing the level of security that needs to be rolled out. That's partly due to the current geopolitical climate and the increase in state-sponsored hacking. And it's partly down to the cyber threats that are out there on critical national infrastructure. So, for example, when Colonial Pipeline in the US was hacked, they could no longer supply energy. Energy security is very important. CEO of that company had to stand in front of the Senate and explain what happened. So the drive for more authentication is definitely there. The one that really resonates with us here is the new version of FIPS 201-3. So this is the one that most of our customers need to comply with. First and second version of that standard said PKI is all you can use. The third version, which was ratified in January, customers have around 12 months to start complying, says, depending on the level of data you're protecting, you can use different forms of authentication. They don't need to all be at the highest level. So it's broadened the scope of the regulation substantially. So if, as some of our customers do, they're protecting military helicopter plans, air traffic control systems, access to US citizen data, absolutely you need to be at the top level. If, however, you're not protecting data as sensitive, you can be further down that pyramid. So a hardware one-time password token, a phone as a push notification app may be enough to give you that protection. Even if you're protecting right down at the bottom of the pyramid, so data that's not particularly sensitive, but you still need a level of protection, you can use a password, but you have to know it's as secure as it can be, and it's not known to be compromised. So there's definitely drivers in our existing types of customers and customers for a wider range of authentication. The other thing we're seeing is demand for people wanting to move away from passwords towards passwordless, and also phishing resistant credentials. So phishing resistant credential is one that can't be stolen. Phishing is where somebody will steal a credential from somebody and then reuse that credential to log on as that person. That's exactly what happened in the Colonial Pipeline situation. So a password was stolen and was used to access the system and plant malware. So under those examples, people are looking to move towards more secure authentication, but many of them don't have the skill set or the budget to actually move to the highest level, but they don't need to. They can still get more secure. So we're seeing increased demand from our high security conscious customers and from lower down the market for a wider range of authentication.
So over the last 2 to 3 years, we've been trying to anticipate the drivers that Alan's been talking about. We're very close to organizations like NIST in the US who develop these standards and ultimately publish and ratify the standards. And that basically has been the input for our M&A journey. So if we start on the left here, 18 months ago, we were very, very clear in what we wanted to achieve. We said, we know that PKI space, we know it, we're trusted in that space, we got the referenceability, we can see where FIDO is going, we bring FIDO into the product, and basically start to offer a single pane of glass for customers who want to manage both PKI credentials as FIDO credentials. Then we looked at the middle section of that pyramid and said, okay, what do? We either partner, we build, or we buy. Partnering we didn't see as a valid option because there's a lot of consolidation taking place. So one day you partner with somebody, tomorrow they're owned by one of your competitors if you're not careful. We looked at building the capability and came to the conclusion it would take us 2 to 3 years to build a credible product in that space. Whilst we knew the market would open up, we knew that FIPS 201-3 was about to be ratified. It was actually ratified in January this year. So we decided to go on the M&A track and identify key players in this in the wider MFA space. We've done a global search on these companies. In the end, we had 2 companies ready to sign LOIs. We decided to focus on the company we announced earlier in October, a company called Orthologics. They're UK-based, Bracknell-based. They're easy to get to. All the development is done in the UK, so we can very quickly integrate the teams. The guys are very, very credible, but they also brought a secondary product. Even though we weren't in the market looking for PSM, password security management, they presented this product in addition and fully integrated into their MFA offering. Based on due diligence, we said, yeah, this is a real good fit. We can see how we can bring this to market. As Alan said, passwords are here to stay for the long term. So if you're going to use passwords, make sure you don't use a breached or an exposed password. And that's exactly what Orthologics is offering. So step 1 in our journey for M&A was to come down that pyramid. And with Orthologics, we believe we've achieved that. And we are now actively integrating Orthologics into our core business. Integrating it from a product perspective, we fully expect that within the next 6 to 8 months, we have an integrated product version. Clearly, the ambition here is to continue to sell individual products because some companies may only want PSM, some companies may only want MFA, some companies may only want FIDO or PKI. So standalone offerings are absolutely fine, but particularly in our client base, but also in prospects going forward, our ambition is to offer a fully integrated solution. So you then have the single pane of glass and you can choose where the client can choose where they want to be. They want some users on PKI, other users on FIDO, whereas others may use standard MFA through one-time passwords, either through an app or through a hardware or an SMS message. So that's step 1. But as Alan likes to refer to it, M&A is not one and done on the back of a single deal. So M&A for us is a journey. So we have a full-time head of corporate development. We've already been scouring the market for adjacent areas that are in effect overlapping pyramids. And as Alan's already indicated, Zero Trust is very much the buzzword at the moment. We know that's going to come. Once SAM is on the network, we need to make sure that half an hour later, 2 hours later, it's still SAM and it's not somebody purporting to be SAM. So where are the areas we're looking at? We're looking at continuous authorization. We're looking more at access control. But we're also looking at areas that are very much adjacent to what we do. We very much focus on employee identity, but there are adjacent areas like device identity. So, they in effect manage the same credentials, but rather than doing it for a person, you're doing it for a device. So we have a very clear view of how we're going to take the M&A journey going forward over the next 6 to 12 and indeed many years beyond that. And we will aim to find new potential acquisition targets that we can bolt on to our existing offering, always with a view that we want to be market leading in the technology that we bring to the market. So if we then try and wrap up and say summary and outlook, if we go back to the results, we believe we delivered good solid revenue growth. 24% is a good starting point. We want to keep that going. Our operating profits is very much improved on the back of the revenue. We maintain our focus on margin. Margin has significantly improved compared to the reporting period last year. Continue to focus on cash. As Nikhil said, cash conversion was strong, still continues to be strong. But with a new CFO, you also get new rules, and robust working capital is something that Nikhil is very much hammering down in the company, particularly when there is uncertainty in the wider economical climate at global level. And from a balance sheet perspective, our balance sheet is clean. We dealt with the convertible about 18 months ago. We got no debt on the balance sheet. So if we look at where we are today, we had good momentum in half one. We've carried forward that momentum in the beginning of half two, and the aim is to keep driving until the end of March and indeed the end of the fiscal year. So if we then try and provide a wrap up from an outlook perspective, I think we're in a real good position. We closed some more deals in the beginning of half two here in the UK, continental Europe, as well as North America. We continue to provide quarterly releases, so clients basically on a quarter by quarter basis can choose to take advantage of net new functionality that we've released. We remain vigilant and cognizant of what's happening in the global working environment, and focus on the working capital, but also our forecasts and margins. We continue to push for the scalability both organically in terms of revenue growth, but also M&A. M&A is very much part of the journey going forward. We've consumed our first deal. It definitely won't be our last deal, but we'll do lots of analysis and lots of DD before we come back with further announcements. Clearly, we aren't a business unless we look after our employees. Nikhil already referred to our 6 C's. Leading C in there is colleagues, indeed our employees. Without our employees, we don't have a business, we don't have code, we can't serve our customers, we can't serve our channel partners and indeed resellers. So we try and look after our employees as best as we can, even in the difficult environment we find ourselves in. The cost of living allowance payment is a small contribution to help them through the winter period, and whenever we can do more, we will try and accommodate. Finally, from an integration perspective, we're about 5 to 6 weeks after the announcement of AuthLogix. The integration is well on track. We have a clear integration team. We have a clear integration tracker. We are starting with customer and partner introductions. We had our head of sales for rest of world visiting Dubai in the last 2 weeks, meeting distributors and resellers for AuthLogix, but at the same time introducing Interseed to the party. And we actually find that there is interest in some of the resellers to actively take on PKI because they know it's being used, particularly at government level. So we bring a net new offering to those distributors. At the same time, we're also taking AuthLogix into our core market, particularly the North American market. Alan was there last week during our client advisory board, where we had around 40 clients attending. And we had one of the AuthLogix team members with Alan and the rest of the team joining in and actually presenting the AuthLogix offering to, what is clearly a higher, more security conscious type of customer. But we've had real good feedback both from the customers, but also from the partners. So we're really trying to cross-fertilize the both channel models, and over time they will be fully integrated. From a product perspective, already referred to, Alan is working with the AuthLogix team to make sure we have an integrated offering in 2023, and we will be making further announcements in due course on that. So overall, I think we've had a good run in half one. We're confident for the outlook for the second half. We're confident for the outlook for the full year. And I always say we can only control what we can control within our business. And as long as we focus and continue to focus on what we do well, we'll drive the results. So on that note, I'm going to hand back to Jake. And I think we then open up for Q&A. There were a few questions already put on the board. We've answered those questions, so we won't go through those specifically, but they will be posted as soon as the session closes. But at this point, I hope that Jake will be back online.
Class, absolutely. And Alan and Nittel as well, thank you very much indeed for your presentation this afternoon. Ladies and gentlemen, please do continue to submit your questions just by using the Q&A tab that's situated on the right-hand corner of your screen. But just while the team take a few moments to review those questions that were submitted already, I would like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboard. Class, as you kindly did just mention there, we obviously received a number of pre-submitted questions ahead of today's event, which you have kindly provided responses to already, so we will publish those post the call. But as you can see in the Q&A tab there as well, we've also received a number of questions during the presentation itself. So firstly, thank you to everyone on the call for taking the time to submit their questions. And Class, Alan, Nittel, if I could just hand back to you to respond to those where it's appropriate to do so, and then I'll pick up from you at the end. Thank you.
Thank you. So I will read out the questions. There's one big benefit in reading out the questions because I can decide which area they're going to go. So first question is from Michael. I don't know who's... Oh, thank you. Michael's got a question, and his question reads as follows. What KPIs are you using to monitor the success of the AuthLogix acquisition? And could you talk a bit more about what your main strategic priorities are for the next 6 to 12 months? Nittel, do you want to take the first part of that question?
Thank you. Obviously, the big KPI is the revenue streams for the deferred consideration. So in FY23, FY24, and FY25, the vendors have got revenue targets to achieve that deferred consideration, and that's £633,000 in FY23, 1.5 million in FY24, and 3 million in FY25. So that's a key critical KPI for them to focus on, and for us it's really good news, because if they hit those numbers, although they get the deferred consideration, we're generating that revenue. It's our revenue, it's feeding to our bottom line, and it's annual recurring revenue, and it's a subscription model. So that's a key KPI. Obviously, cash generation is always a key KPI, and the main thing is that this is not a heavily intensive outlay for AuthLogix. The main thing, the reason why they joined us was because they don't have the sales and marketing footprint that we do and our channel partners. So we're expecting a lot of feed down into the profit and cash flow generation. As you can imagine, the integration tracker has got some KPIs set in there: sales and marketing, finance, obviously taking control. We've got an integration plan regarding product roadmap, which Alan can discuss in more detail if required. But we've got some real set KPIs across the whole piece of what we do as an offering, and we're monitoring those and tracking those going forward.
Good, thank you. The second part was, what are your main strategic priorities for the next 12 months? I think, Michael, it's all about revenue growth. We need to scale this business, revenue growth, both organically but also inorganically. We talked about what we want to achieve from an AuthLogix perspective. From an organic perspective, we really want to drive the revenue growth going forward, and everybody is geared towards that. So next question is from Quentin. In your last presentation, you said that MyID was increasingly being offered by your resellers. How is the strategy progressing, and when can we expect to see the exponential growth that this might deliver? Well, let me try in that one. We are continuing to focus on our resellers. I think it's 89% of the business booked in the first half was booked through resellers. So we're continuing to focus on that. The good news with AuthLogix is they have their own distribution network. It's not overlapping, so we have a really good opportunity to cross-fertilize, and we'll continue to train the various parties. So we'll train, and this has already started and is in play as we speak. We'll continue to train the Interseed resellers and partners. Will continue to train the AuthLogix resellers and partners, so we can cross-fertilize. With regards to growth, I think where we're showing good growth at the moment from a revenue perspective, the fact that the overwhelming majority of our business is booked through partners is a good testament that we're on the right track. Yes, I'm always impatient. I always would like to run faster, but at the same time, if we're booking nearly 90% of our business through channel and partner, I think that's a real good starting point. Next question is from David B. Do you have any aspirations to have MyID in the wider consumer market? Now, I don't want Alan to feel left out. So, Alan, here's one for you.
Thanks, Klaas. The honest answer is not yet. So we'd like to grow from a position of strength. MyID product and the Orthologics products are very much enterprise-focused products. So that's where we want to move today and grow those. Consumer market tends to be more SaaS-based. If we move into this space, it will be down to an acquisition as opposed to taking the current product set into that space.
Sorry, I was on mute. Thank you. Next question is from Sam E. You mentioned the M&A program in your recent RNS with the intention to add to your recurring income stream. What percentage of your revenue is currently recurring? Nitil, one for you.
80% currently. And we're looking to increase that, as you can imagine. So it's a really good metric for us. And thank you for asking the question. It's 80% if you count S&M as recurring and an element of PS, which attaches itself to that, and then adding the annual recurring revenues of Orthologics going forward into FY23.
Next question is also from Sam. Can you please also give us an update on initial discussions with partners and clients you're having following the Orthologics acquisition? I think we've part answered that already, Sam. We are actively having dialogue with partners and channels and resellers on both sides. A couple of days after the acquisition, I flew into the US to spend time with our team, but also spend time with partners. We've had our head of sales for Europe flying into the Middle East to meet the channel. Where had Alan out in region, and he was joined by Orthologics staff in the US during the client advisory board. So we're driving really, really hard to make those introductions and make sure that everybody is comfortable in what they're doing. David has got a question. Are there any capacity constraints or issues in scaling up the business? This question keeps coming up, I think, in most sessions. I don't think there are capacity constraints in what we do. We have capacity to take on more business. And it's also the reason why our go-to-market model is very much driven through channels and partners. You know, we are still a small team. We're around 90 staff. We cannot run a global sales initiative with a small group of people, but actually we can scale out very, very quickly to partners and resellers. And also in that capacity, we have technology partners who frequently make introductions for us. So I don't think there are immediate capacity constraints, or if the secondary question is, do we need to make significant other investments to scale the business? I don't think at this stage that is the case. Martin has got a question. Are you going to report sales in North America, Europe, Middle East separately in the future? Where do you see the biggest growth? Nitil?
Well, actually, there is a UK, North America, Europe, and rest of the world analysis in the RNS, note number 2, so the revenue stream. We won't be splitting Middle East out because it's part of the ROW, but going forward, we'll have a look at that. But that has been split out in the note for reference if you need to look at that. It's note 2 in the RNS.
Thank you. I think that's us done with regards to questions. Jake, back to you.
Class, absolutely. Thank you very much indeed. And Alan and Nitil as well for addressing all of those questions that came in from investors this afternoon. And of course, if there are any further questions that do come through, we'll make these available to you immediately after the presentation has ended for you to review, to then add any additional responses, of course, where it's appropriate to do so. Class, perhaps before redirecting those on the call to provide you with their feedback, which I know is particularly important to yourself and the company, if I could please just ask you for a few closing comments to wrap up with, that would be great.
Yep, so a couple of final words in closing. Following the Orthologics acquisition, as well as a solid start in half one, we're looking forward to the integration of the new business, as well as continuing with our organic growth in the second half. We have a highly committed and loyal team of colleagues who day after day deliver the best code in our part of the industry. Our aim remains to deliver sustainable revenue growth and profitability, and we clearly maintain our forecast for the full year. Thanks again for attending. We look forward to updating you all again in the new year. And finally, please do provide us with your feedback at the end of the session. We do take your feedback very, very seriously, and we look forward to seeing you again soon.
That's great. Class, Alan Nittle, thank you once again for updating investors this afternoon. Could I please ask investors not to close this session, as you'll now be automatically redirected for the opportunity to provide your feedback in order that the management team can better understand your views and expectations. This won't take a few moments to complete, but I'm sure will be greatly valued by the company. On behalf of the management team of Interseed Group PLC, we would like to thank you for attending today's presentation. That now concludes today's session, so good afternoon to you all.